The American auto market is in complete chaos. Prices are collapsing, dealerships are panicking, and at the center of it all, Toyota, the company everyone thought was playing it safe, just flipped the entire US auto industry on its head. This isn't just another corporate move. This is a calculated shockwave that's rippling from Detroit to Wall Street, and even the White House is scrambling to understand what just happened. Because Toyota didn't just build a car, they built a strategy, one that completely exposed the weaknesses of the American auto giants, and even sent Tesla's investors into panic mode. So, how did Toyota pull this off? Why are Ford and GM suddenly cutting prices, slashing jobs, and begging dealerships to move inventory? And what does this mean for the future of the American auto industry? Let's break it down. Nobody saw it coming. In a market obsessed with electric hype, Toyota launched a hybrid-first revolution, rolling out new ultra-efficient, affordable hybrid models across the US, while competitors were still struggling to make EVs profitable. The move was simple, but devastating. Toyota realized what Wall Street and Washington didn't. Americans weren't ready to go all electric, with charging infrastructure still a nightmare, battery costs still sky high, and EV resale values in freefall. Toyota bet on what consumers actually wanted: reliability, affordability, and fuel efficiency. And that bet paid off big time. Practically overnight, Toyota's hybrid sales exploded. Dealerships couldn't keep them on lots. Customers were trading in expensive EVs for dependable hybrids that cost half as much to buy and nothing to worry about on long trips. That's when the panic began. Ford, GM, Tesla, all suddenly forced into reaction mode as Toyota slashed prices and flooded the market with new hybrid Corollas, RAV4s, and Tacomas. Other automakers had only one choice: cut prices or lose customers. But for Ford and GM, that meant bleeding money. Their EVs, already expensive to build, suddenly became unsellable when Toyota hybrids offered more range, faster refueling, and far lower prices. Dealerships across America started ringing alarm bells. Unsold EVs piled up in showrooms. Trucks and SUVs that once sold for premium prices suddenly couldn't move, even with massive discounts. By mid-year, some dealers reported that Toyota outsold Ford and Chevy combined in multiple regions of the US heartland, a place once considered sacred territory for American brands. Toyota didn't just win a sales race, they triggered a price collapse that's still shaking the industry. Across the country, it's chaos. Showrooms that were packed with customers a year ago now look deserted. Rows of shiny electric SUVs gather dust, while interest rates and insurance costs keep buyers away. Dealers are desperate. They're offering 0% financing, huge rebates, even taking losses. But it's not enough. And here's the twist: Toyota's move didn't just hurt its rivals, it exposed how fragile the entire US auto system has become. American automakers spent billions chasing EV mandates and Wall Street hype, ignoring their traditional buyers, the middle-class Americans who wanted practical cars, not luxury-priced electric experiments. Now, those same buyers are turning to Toyota, and the ripple effect is devastating local economies. Small-town dealerships, once dependent on Ford and GM, are shutting down. Auto workers are facing layoffs. And used car prices? They're crashing. For years, the used car market was on fire. During the pandemic, prices hit record highs, but that era is over. Toyota's aggressive pricing flipped the used market upside down. As brand new Toyotas became more affordable, used cars, especially older EVs, lost their value overnight. Owners who bought Teslas or Mach-E's just 2 years ago are now discovering they're tens of thousands of dollars underwater on their loans. It's a financial nightmare. Banks are tightening lending, repossessions are climbing, and the once booming car market is sliding toward a meltdown. And it all started because one company, Toyota, refused to play by the new rules. Here's where things get really interesting. For years, Toyota was criticized for being behind on EVs. Analysts mocked them. Activists slammed them. The media called them outdated. But behind closed doors, Toyota executives were quietly watching and waiting. They saw governments forcing EV adoption before infrastructure was ready. They saw automakers rushing half-finished EVs to market just to appease investors. And they saw an opportunity. Instead of burning billions on unproven tech, Toyota doubled down on what it knew best: hybrid systems, efficient combustion, and supply chain mastery. The result? While Ford and GM begged Washington for subsidies, Toyota built profitable cars without relying on government lifelines. And now, Wall Street is finally catching catching on. Toyota stock is surging while American automakers shares are tanking. Investors are bailing out of US car makers, realizing Toyota might just have triggered the beginning of the great American auto collapse. Ford, GM, Stellantis, the so-called Big Three, are now facing their worst crisis in decades. Ford just announced major layoffs in its EV division. GM is cutting production targets. Stellantis is quietly closing plants in North America. Meanwhile, Toyota is expanding, building new factories in Texas and North Carolina, hiring thousands of American workers, and tightening its grip on the US market. It's almost poetic. While American automakers move production overseas, Toyota is building cars in America and selling them to Americans who've lost faith in their own brands. Remember when electric vehicles were supposed to save the industry? Well, those dreams are starting to look like a nightmare. Battery costs are still sky high, charging networks are unreliable, and cold weather range issues are scaring away buyers in northern states. Toyota's hybrid-first approach suddenly looks genius. Their vehicles deliver incredible mileage, cost a fraction of the price, and avoid the infrastructure headache entirely. While companies like Rivian and Lucid bleed billions in losses, Toyota is posting record profits. Even Tesla is feeling the heat, slashing prices, cutting staff, and losing market share as buyers shift to hybrids. It's clear now, Toyota didn't just outsmart its competitors, it outsmarted an entire ideology of electrification built on hype instead of reality. From Michigan to Texas, the shock is spreading. Communities built around Ford and GM factories are being hollowed out. Local economies that depended on dealership sales are collapsing. Auto parts suppliers are shutting down by the dozen, and while this is happening, Toyota is quietly expanding, especially in states like Alabama and Kentucky, where they're opening new hybrid component plants. In other words, Toyota didn't just flip the auto market, they reclaimed the American heartland. Ask everyday Americans why they're switching to Toyota, and you'll hear the same thing over and over: affordable, reliable, efficient. While other automakers chase trends, Toyota focused on trust, and that's something no government mandate or Wall Street memo can fake. Buyers don't want an experiment, they want a car that works. And right now, Toyota is the only one delivering that consistently. But here's the part almost no one is talking about: the car loan time bomb that Toyota's market flip just detonated. Over the last few years, Americans took out record high auto loans to buy overpriced EVs and luxury SUVs. Many of those vehicles are now worth far less than the loan balance. That means millions of drivers are suddenly trapped underwater, owing more than their cars are worth. And as Toyota floods the market with affordable, high-mileage hybrids, those used EVs and luxury models are collapsing in value even faster. Banks are panicking, repossession rates are spiking, and for the first time since 2008, analysts are warning of a consumer credit collapse tied directly to car values. The chain reaction is brutal. Car values fall, loan defaults rise, and dealerships are forced to take massive losses on trade-ins. Toyota's move, while brilliant for consumers, has ripped open the cracks in America's over-leveraged auto finance system. And the scariest part? It's only the beginning. While EV startups struggle with high battery costs, oil prices are creeping back up. For Toyota, that's not bad news. It's an advantage. Their hybrid lineup thrives when fuel prices rise. Drivers who were once tempted by Teslas are now realizing that a hybrid RAV4 can get over 40 miles per gallon and refuel in just minutes. Toyota is suddenly positioned perfectly between two extremes: the unrealistic EV promise and the gas-guzzling SUV legacy. And as global tensions push oil prices higher, every gallon saved by a Toyota hybrid becomes another nail in the coffin for automakers who ignored efficiency. That's why industry analysts are now calling Toyota's hybrid dominance the new middle ground, the balance point between affordability, performance, and practicality. In other words, while everyone else is struggling to reinvent the wheel, Toyota's just perfecting it. If you think the chaos stops at dealerships, think again. Wall Street is on fire. Investors are dumping shares of Ford, GM, and EV startups faster than they did during the 2008 crash. Stock prices are tumbling. Hedge funds that once championed Tesla are quietly shifting billions into Toyota and other Japanese automakers. The message is clear. The market has lost faith in the American auto dream. Toyota, meanwhile, is sitting on record profits, stable debt, and expanding US operations, while Detroit automakers are taking bailout-style losses. Some analysts are even calling it the Japanese Chinese takeover 2.0. But this time, it's not about flashy imports. It's about who truly understands what the American consumer wants. And Toyota somehow does. Behind the headlines, something much bigger is happening. Something that could reshape the future of American manufacturing itself. While US automakers are closing plants and laying off workers, Toyota is hiring. They're expanding factories in Texas, Missouri, and Kentucky, the same regions where Ford and GM are cutting production. Insiders call it Toyota's reverse outsourcing. Instead of moving jobs overseas, Toyota is bringing more of its supply chain into America. This isn't just business strategy, it's psychological warfare. They're showing the American public that Toyota isn't the foreign threat anymore. It's the company saving American jobs while US automakers abandon them. That narrative is powerful. It's reshaping public trust, one factory at a time. We're now entering what some experts are calling the EV recession. Demand for electric vehicles is collapsing faster than expected. EV-only startups like Rivian and Lucid are slashing prices and cutting production. Even Tesla's margins are shrinking. Meanwhile, Toyota's hybrid and plug-in hybrid models are selling faster than they can be built. The irony is staggering. The company once criticized for being too slow to electrify is now leading the green transition in the most profitable way possible. Analysts predict that if trends continue, Toyota could surpass every US automaker combined in market share within 5 years. And that's not just dominance, that's a total realignment of power in the global car industry. Let's be honest, part of Toyota's success comes down to something Americans used to be proud of: engineering discipline. While US automakers chased high-margin trucks and flashy EVs, Toyota focused on durability, cost control, and precision manufacturing. That's why their cars last longer, need fewer repairs, and hold value better, the exact opposite of what's happening with Ford and GM models right now. The result, consumers are voting with their wallets. They're walking past Ford showrooms and straight into Toyota dealerships. Not because of advertising, but because of trust built over decades. Toyota didn't just build better cars, they built a reputation that's now crushing the entire US market. Make no mistake, this isn't just a bad year for US automakers. This could be the start of a generational collapse. Toyota's strategy has exposed how fragile the American car industry truly is. Over-leveraged, overhyped, and out of touch with the middle class that built it. And as Toyota continues to expand, while Ford and GM contract, we're witnessing what may be the biggest industrial power shift since the 1980s. The auto meltdown has already begun, and Toyota is the only one walking through the fire untouched. To really understand how Toyota flipped the US auto industry, we have to rewind back to 2020. While the rest of the world was in chaos, automakers were panicking. Ford and GM were rushing into electric projects, desperate to impress investors and politicians. Tesla was riding an unstoppable wave of hype, and Washington was promising massive EV incentives that everyone thought would reshape the market forever. But quietly, in Tokyo, Toyota's leadership was making a completely different calculation. They looked at the numbers, they looked at global charging infrastructure, they looked at supply chain risks, rare earth mineral shortages, and the enormous cost of battery recycling, and they said, the world isn't ready. Instead of chasing short-term approval, Toyota prepared for the long war, building hybrid systems that could transition seamlessly between gas and electric. They invested in solid-state batteries, alternative fuels, and hydrogen tech, all while the rest of the industry burned billions on a one-dimensional EV dream. Fast forward to today, and that patience is paying off in spectacular fashion. While others are slashing EV production targets, Toyota is launching hybrid factories, breaking profit records, and earning back consumer trust. It's not luck, it's strategy. And it's a reminder that in the auto world, the tortoise always beats the hare. Here's the part most people miss. Toyota's dominance didn't just happen in California or New York. It happened right in the heart of America. In towns once filled with Ford F-150s and Chevy Silverados, you're now seeing Toyota Tacomas and Tundras in every driveway. And it's not just about price, it's about identity. Toyota's trucks are built in Texas, their engines are made in Alabama, their components come from suppliers across Kentucky, Indiana, and Missouri. In other words, Toyota has quietly become more American than the American brands themselves. While Ford and GM moved plants to Mexico and China, Toyota built deeper roots in the US, creating thousands of jobs and reshaping local economies. That's why so many Americans are switching sides, because they no longer see Toyota as a foreign automaker. They see it as the only brand still investing in them, and that emotional connection, that's something money can't buy. Now, let's talk about one of the most controversial decisions in auto history. Toyota's refusal to go all electric. For years, environmental groups accused them of holding back progress. Politicians threatened to pull incentives. Analysts called them dinosaurs. But Toyota knew something nobody else wanted to admit. Full EV adoption wasn't just a challenge. It was a trap. They understood that batteries would become the new oil. Scarce, expensive, and politically charged. They predicted that the world's obsession with EVs would lead to supply shortages, price wars, and mass consumer fatigue. And now, that's exactly what's happening. By staying balanced, focusing on hybrids, plug-in hybrids, and new battery tech, Toyota avoided the collapse that's now dragging down the rest of the industry. They didn't resist progress, they redefined it, and in doing so, they may have secured their place as the world's most resilient automaker. Toyota's US takeover isn't just an American story, it's triggering a global chain reaction. European automakers are now scrambling to pivot back to hybrids after years of forcing EV mandates. Chinese automakers, once confident in their electric dominance, are suddenly facing a flood of affordable Toyota models entering their markets. And Japan, it's becoming the new center of automotive innovation again. Not because of flashy tech, but because of smart engineering and real-world practicality. Toyota's flip didn't just shake up the US, it changed the direction of the entire global car industry. Now let's talk about the money, because when Wall Street starts moving, you know something big is happening. In the last few months, institutional investors have started a massive shift. Billions of dollars are flowing out of overvalued EV startups and straight into Toyota stock. Hedge funds that once bet everything on Tesla are now calling Toyota the only stable bet in autos. And it makes sense. Toyota's profits are soaring, its debt levels are minimal, and unlike its American rivals, it isn't begging for subsidies to stay afloat. That's why market analysts are warning, this isn't just a rotation, like it's a changing of the guard. Wall Street, once obsessed with disruption, is now rewarding discipline, and Toyota represents exactly that. But let's not sugarcoat it. Toyota's rise has left real pain in its wake. Tens of thousands of American auto workers are facing layoffs. Small-town dealerships that thrived on GM and Ford sales are going under. Entire regions are feeling the squeeze as Toyota consolidates power. And while Toyota builds more US factories, they're also automating faster than anyone else, meaning fewer jobs per car built. It's a bittersweet revolution. The company saving the industry's stability is also accelerating its transformation. The old system, built on loyalty, labor, and legacy, is fading fast. And a new one, driven by efficiency and precision, is taking its place. But at the center of all this chaos is the consumer. For decades, Americans were told that progress meant paying more. For bigger engines, for more features, for electric luxury. Toyota flipped that narrative overnight. Now progress means value. It means owning a car that lasts, costs less, and doesn't trap you in endless payments. And that's why this shift isn't temporary. It's psychological. Consumers have seen behind the curtain. They know who's overcharging and who's delivering. That's why even as Ford, GM, and Tesla try to rebuild their image, Toyota's trust curve is rising fast, faster than any marketing campaign could ever achieve. The question now is, who's next? Because Toyota's success has set off a chain reaction that's only gaining momentum. Suppliers that once served the big three are now signing deals with Toyota. Battery companies are prioritizing hybrid cells over full EV packs. And Asian automakers like Honda and Nissan are quickly following Toyota's hybrid-first model to avoid being left behind. Even European luxury brands, BMW, Mercedes, Audi, are quietly backtracking on their all-electric by 2030 promises. Everyone's scrambling to catch up to Toyota's playbook, but the truth is, they're years too late. Here's what's truly shocking. Toyota didn't just outmaneuver the market, it rewired the global supply chain while everyone else was distracted. When chip shortages crippled automakers in 2021, Ford and GM were forced to halt production for months. Tesla delayed shipments, Rivian struggled to deliver, and the entire US industry fell into disarray. But Toyota, they barely flinched. Why? Because Toyota had spent decades building a just-in-time system that wasn't just efficient, it was battle-tested. They had stockpiled critical chips, diversified diversified suppliers across Asia and North America and built redundancy into their network long before crisis struck. Now, as others scramble to stabilize operations, Toyota is running factories at full speed, even exporting components to competitors who can't source their own. In a world where supply chains define success, Toyota has become the kingmaker. Every automaker that once laughed at Toyota's old-fashioned methods is now quietly studying their playbook, desperate to copy what works. But here's the hard truth. Toyota's system isn't something you can replicate overnight. It's the result of 70 years of discipline, precision, and long-term thinking, the very qualities Wall Street-driven automakers abandoned. And now, even the media is being forced to admit it. Toyota was right all along. For years, headlines mocked them for being anti-EV and stuck in the past. Tech journalists and activist investors painted Toyota as a dinosaur, clinging to combustion while the future went electric. But those same outlets are now writing a different story. Toyota outsmarted the EV rush. Hybrid strategy pays off. Toyota wins while EV startups burn. It's a total reversal. The same journalists who once laughed are now scrambling to explain how the slowest automaker became the most profitable and the most trusted. And while others chase the next big thing, Toyota is doing what it's always done best: perfecting what works. Once one family in a neighborhood switches to Toyota, the rest follow. It starts with a neighbor buying a hybrid RAV4 just to save on gas. Then another trades in their F-150 for a Tacoma. A few months later, a Corolla Cross shows up next door. Suddenly, that entire street has shifted loyalty, not because of flashy marketing, but because of word of mouth. This domino effect is happening across the US right now. Families, small business owners, delivery drivers, all discovering that Toyota simply offers more for less. It's not about luxury anymore. It's about logic, and logic is winning. Meanwhile, the big three are running out of moves. Ford is losing billions on EVs each quarter. GM is cutting production targets and canceling models before they even launch. Stellantis is laying off workers in Michigan and shifting Jeep production overseas. Each of these companies once defined American industry. Now they're being defined by their decline. They're not innovating, they're reacting. Every move they make is a response to Toyota's lead. And the irony? Toyota's doing it all without noise. No overhyped launches, no viral PR stunts, just quiet, relentless dominance. As one former GM executive put it, we were chasing headlines. Toyota was chasing results.